Are you interested in seeing exactly what other business owners are saying behind your back? If you haven't yet, click the bell and subscribe to be notified every time we produce our best pieces of content. Now, whether you like it or not, there are various credit agencies that rank you for various different criteria. They will have these reports readily available. So the best thing that you can do is understand them. How these can make your business better, correct anything that's wrong, understand your key customers, understand your key suppliers, and do the best you can in these turbulent times ahead. So credit scores are taken by various financial institutions that pick out lots of financial data from lots of data points and give you a score. They will look at how often you file your accounts at Companies House. They will look at your bank balance record. They'll look at any CCJs. There'll be a lot of factors that go into these to produce an overall credit score. They're important because other people will look to assess how creditworthy you are. So I'll give you an example. If you're a growth business and you're getting finance for growth and you're getting a loan for that, the bank will look at your credit file to see how good or bad you are. And how good you are to how bad you are will determine how much interest you pay on that loan. Also, if you get suppliers services on credit, your suppliers will look at your credit file as well. The better your credit rating, the more credit your supplier will likely give you. Other companies will look too. So what you may find if you're looking to pitch yourself to a really good customer, they may check out your credit file. Now, in these turbulent times that we're heading into, or any time really, your business can sometimes fail down to the people around you that you're doing business to. An example is if a big customer of yours that you've got credit terms on ends up not paying you and being a bad debt, you will lose your money. Vetting your customers. This is really important because we all want to ultimately make more sales because that's going to lead to loads of profit. That's why we're in business. But the thing to bear in mind, if you're selling your goods or services on credit and they don't pay, that is a bad debt. No one wants to take these. Now, we're in the times of entering some really turbulent times. So if you're selling any goods or services on credit to customers, you should be credit checking these as a minimum. And also keeping an eye on any alerts that are coming up to make sure that if they have a marker on their file or there's a problem, you get known to this quickly. This will help reduce the potential of taking a bad debt, which is one of the most ranked horrible things that you can have as a business owner. As I've said earlier on in the video, we can have the best well-run businesses in the world. And that's everyone's holy grail as a business owner, to have the best internal business. But it's not always directly you as the business owner that will have the biggest effect. It can be the people around you. So you may have customers that you're selling stuff to, and if they go bust and don't pay you, is going to hurt. You are also going to have suppliers, which they may provide materials or they may provide key services to help you deliver your product, that if they're out of business, you need to find somebody else. Now, I'm not just doing this to scare you. At the minute, we're entering, as I said, turbulent times. So this is the time not to be living in fear, this is the time to be careful. So with the key people around you, how creditworthy are they and how well are they really doing? Now, there are various ways that you can tackle improving your credit rating. There could be on your file, there could be markers on there or CCJs that just do not exist. So what I would suggest is get hold of your credit file, understand it, and is there anything on there that looks completely wrong? There are also other things that you can do as well to improve your credit file. Most small businesses in the UK file abridged accounts, which don't include a profit and loss account, they just include a balance sheet. Now, sometimes from a credit perspective, that can mark you down. But don't worry, there are things that you can do to help improve that, to bring your credit rating up to exactly what it should be. I hope this video's really helped. But if it has spurred questions or you'd like to advance further on how to look into your credit file, click my Calendly link below to book a discovery call. I'll help you as much as I can, and I promise there'll be no pushy sales pitch.